Hello and welcome. This is Business Incorporated coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. On the show today, the International Monetary Fund concludes its Article 4 consultation with West African Economic and Monetary Union. The IMF Managing Director hails Egypt's strong economic reform program. Plus, Anglo-South African financial group Old Mutual puts up for sale its 50% stake in a Chinese insurance joint venture. Let's get started, and we begin with the markets. And here in Africa, the Johannesburg Stock Exchange reversed the positive trend to enter into the red zone at intraday trade following the lingering political tensions after a controversial cabinet reshuffle. Egypt also slipped, reversing the positive trend recorded throughout the week. At midday, the Nigerian all-share index was looking good up at 0.12%. Nairobi Stock Exchange closed in the red on Wednesday. And in the Middle East, the markets were mostly low at intraday as crude oil pulled away from a near one-month high hit in the previous session. All the index were in the red except Saudi Arabia, which was trading up 0.42%. Abu Dhabi was down 0.55%. Dubai financial markets down 0.19%, and Qatar was trading down 0.10%. In Europe, the ECB President Mario Draghi says the bank's policy is adequate and as of yet it is too soon to start tightening. Let's get across to my colleague at the Frankfurt Stock Exchange, Janelle Dumoulin, to know how the markets there are taking that statement. Good afternoon, Janelle. Thank you very much for joining us. Now, ECB Chief Mario Draghi has dampened hopes of a rate hike and the winding down of his stimulus package. How are equity investors and bondholders reacting to this piece of news?
Now, the main effect of Draghi's statements have been to push the euro down to a 3-week low, although the euro is already starting to recover from that. And at the moment, investors are also flocking to real estate stocks in anticipation of low interest rates that, after Draghi's statements, seem to be here to stay. But the interesting thing is, like, in the last weeks, we have actually seen some speculation that the ECB was heading towards more tightening because of inflation picking up and because of improved growth aspects in the Eurozone, outlooks in the Eurozone. And markets had already been starting to price in that tightening. And now they will have to digest that once again after Draghi has said that, no, actually, that is not happening. And investors are also torn between the ECB's message of today and news coming out of the Federal Reserve last night that they're looking to tighten monetary policy further by winding down their $4.5 trillion bond portfolio. So that means that could potentially drive up borrowing costs. If you recall, they started buying bonds after the start of the financial crisis in order to force investors to compete for remaining stock by accepting lower interest rates and thus encouraging more lending. So now that that no longer looks set to happen, you will have increased borrowing costs in the U.S., but at the same time, ultra low interest rates still in the Eurozone. And really, as an investor today, it's kind of hard to know where to look.
Now, aside from those headlines coming from the ECB and, of course, Feds, the latest German industrial order numbers came out today and they looked quite good. But place this side by side with some concerns over Greece, Italy, Spain, and even France, and the burden that Germany carries as EU's leading economy.
Yes, German industrial orders, as you said, are looking good. Monthly orders expanded by 3.1% in February, and that, of course, follows a steep contraction in January of 6.8%. So that's definitely a bright spot of economic news coming out of Europe's biggest economy. But it is coming out at a time where other countries are still struggling. For example, Greece, it is still locking horns with its international creditors over its fiscal future and over its labor market reforms. There's a bailout review tomorrow, Friday, of Eurozone ministers, and it's not clear what kind of consensus the parties attending will reach. Now, of course, French elections are also coming up in a few weeks. That's just around the corner, and rising concerns of populism and protectionism are also being heard from there, and that's dampening the outlook for the rest of the Eurozone as well. Now, you also have growing tensions between Spain and Britain over Gibraltar, and all of this is happening under the cloud of the EU losing one of its members as the Brexit goes on its way. So the EU is in an interesting phase economically and politically that would definitely see Germany take more of an outsized leadership role in the bloc's political and economic affairs.
Now, one of the interesting activity, or rather events that investors seem to have their eyes on is the meeting between Donald Trump and the Chinese president. Now, why are investors fretting over this meeting?
Investors are definitely fretting, and we can see that in the DAX today. Now, it's starting to pick up somewhat, but still mostly trading in negative territory, along with most other European indices, except for Paris's blue chip index. Now, it's because this is one of those meetings that threatens to send the global economy into a tailspin if not done particularly well, and that, of course, is not lost on investors here. Now, investors have a pretty good idea of what to expect from the Chinese side, from Xi Jinping's side, and that is increased investment into the U.S. that will bring about a large number of American jobs. So the figure that has been floating around here is 700,000 American jobs, so definitely a big number. But it's less clear what Donald Trump is going to do. He is the wild card here, and he's the one whose actions are going to be unpredictable, and investors are hanging fire and holding off on making major decisions until that picture becomes a bit clearer to them.
Well, Janelle, it's a rainy day here here in Nigeria. I don't know what it looks like there where you are standing, but I'm going to let you go for now. I hope to see you tomorrow. Do have a good day. In the U.S., stock index futures pointed to a higher open today after minutes from the U.S. Federal Reserve's March meeting showed officials want to unwind the bank's $4.5 trillion balance sheet. Thursday will also see President Donald Trump